Good morning, everyone. Thanks for joining here. This is Admiral Markets. My name is Chris, and we're going to take a look at the Forex market together in this live webinar. Before we kick off, though, be aware that this webinar is intended for a global audience. It may not be suitable for everyone. Take a look at this link, admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity to find out more information on that and other conditions and details. Also, trading for exchange and financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. All right, just in case you're looking for a broker or perhaps looking to diversify your portfolio or to add an account or to find an account in the first place, take a look at Admiral Markets, great spreads, and a very interesting Supreme Edition, a lot of extra features. You'll find a lot of information about that when going to just the normal website, admiralmarkets.com, and then you'll see this tab right here at the front, or the homepage. All right, let's take a look at trend lines today. We're going to use them for identifying trends, use them for filters perhaps, and also for establishing where are the bounce and break spots on the chart. Yeah, thank you, Beverly. Definitely a lot better than last week. Absolutely. Wasn't horrible, but still annoying, still bothering. This week we have FOMC, and that's going to be a big one, right? Are we going to get the rate hike or not? The expectation, I think a month or two, 1 or 2 months, was about 50% we would get it in September. It has been even higher, I think. I mean, it was really a decent probability. The market had a decent expectation there that it would happen this Thursday, this month. But as we got closer to September, it started to fall and went even down to 30%, I think. So many don't even expect it anymore. So probably it's not going to happen, but you never know. Who knows? It really depends how the FOMC, how they weigh the importance to certain numbers. No one really knows for sure, of course, obviously. Well, if we get the rate hike, of course, in a historical perspective, it's not much from 0.25 to 0.5, but it is the first rate hike then since 9 years or so. Considering the loosening of monetary policy in the rest of the world, it's going against the trend of the remaining, the globe, basically, the world. So it would increase demand for the dollar if we do get that rate hike, and we could see your dollar fall, pound dollar fall, dollar yen rise. If we don't get the rate hike, then we're probably going to wait another few months, and that could be dollar bearish then. And your dollar could continue with the triangle. So we'll talk about that. But that's a big event on Thursday. Otherwise, we had a rate decision here on the yen, stayed at 0%. We got pound news, inflation rate today, ZEW, German news, retail sales in the US. Alrighty, let's take a look at the euro dollar. We had this channel basically for a couple of days perhaps, and that channel has broken. Now, just because that channel breaks doesn't mean that all trend lines are out of the importance or are not, to be reviewed. For instance, this trend line was just as good as the previous one. So when we have new information like that, we can add it, especially if you see already that a lot of candles are not breaking below it. So we can add that trend line. And now we can see that we're getting probably a second break as we speak. We've got a 1 hour candle here pushing through that trend line. So that's something to be aware of. We can even add a trend line like this, perhaps. That has not been broken. This would be the third touch, but eventually, of course, we're going to get a break. If price keeps pushing through support trend lines like that, you're probably going to see a continuation of that impulse to the downside to probably a bigger support level, like this bottom trend line here, right? Like on the 4-hour chart, this one. So that could be a breakout trade to the downside, back to maybe this lower trend line, from trend line to trend line basically. Right, so we can take this one away, that has been broken. We had a small, as you can see, yesterday, a small break, pullback and continue. It didn't go all too far because the trend was still up, it was still powerful, it's that support here. So we had another bounce, but perhaps we'll be breaking here again. Right, so you can use trend lines like that. You can also put a resistance trend line like that to say, okay, if price breaks above this trend line, then perhaps we're back into that uptrend. So these are important trend lines for the euro dollar, I would say. If we break above 113.25, then there's a chance to retest this top about 113.75. There's that breakout potential right there. Doesn't look like that's going to happen. And actually, it seems like we're breaking again. And maybe there could be a third break right here. This was the first, this is the second, and this could be the third. And then we could maybe retest this trend line, which could be a bouncing spot again. This is how you can use trend lines for bounces and breaks. And if we look at the 4-hour chart, we could do the same, but then on a different time frame. This support line has been guiding price a lot here, as you can see here and here and here, and further in the past as well. Oh. Here and here. Right, so that's a sturdy support trend line. From that point of view, price is making higher lows. So the euro dollar is still, in a certain way, in an uptrend on a 4-hour chart and daily, or maybe daily, I should say, better in bigger consolidation. Looks like a bear flag in a way. So still in that bear flag, in fact. Of course, there are clues that price could be headed for a downtrend now. But really, to confirm that downtrend, we need to break below this daily trend line here, where I have the green circle, and below this 4-hour trend line. We're still above the 4-hour support line, still above the daily support line, and in fact only challenging the hourly support line. So, there are good reasons to see a lot of bullishness here. Doesn't mean that a reversal trade, however, would not be able to succeed, but it is a reversal trade, as you can see, clearly. All right, so let's keep an eye on this hourly candle, 8 more minutes to go. So that's all the trend line perspective, right? From a weekly, you can see it looks like a bear flag. Bear flags typically go to the 38.2 fib, max 50, and hit the 38.2 fib very precisely, as we know. So from a daily, it does look like a bear flag. So if we get the interest rate hike, that could be the catalyst for price to push through this trend line, and start making that fall down to the bottom, and perhaps below that, back to parity, down to parity, below parity perhaps. So from the daily, these bear flag lines are very important. But that's something I don't expect to break today, tomorrow, but only Thursday perhaps, if the news event lines up, because these trend lines I don't think will break prior to that news event. The market is not going to take big positions, drive that price through those support trend lines with such a big news event around the corner. The max it probably could do today and tomorrow, realistically, is maybe break these 1-hour trend lines. That's fine. That's it could still make that correction like this and bounce before Thursday, and it's kind of in flat. It's like a heartbeat. It ends up on Thursday before the news event about the same spot where it probably started this week. All right, because it's going to be that news event is going to be the major driver, most likely. Doesn't mean that there will not be any movement though until Thursday. There will. It's just that we can't expect it to drop 300 pips, I think, before Thursday. It could, you never know, but I don't think it's something we should plan on. So, or I'm definitely not going to do that. So yeah, that's it, I think, from the euro dollar. Let me put on the moving averages. "50-minute world is consolidating." This tells me that we'll see a pullback before we get a follow through. because the moving averages are aligned. They were in a range consolidation. Price is trying to attempt out of it, and most of the time, if it tries to push through away, I should say, from the moving averages for the first time, then we'll get a hook back to those moving averages before continuing, if we continue. Here you can see also that we broke below the 21 band, and now we're using the 21 band as a resistance, and we're trying to break below again. So this could be that 1, 2, kind of 3 correction here. This could be the start. So from an hourly point of view, it looks like we can back to the long-term moving average. But from a 15-minute point of view, it looks like we're going to have a pullback before we drop. Five-minute too. Right, we've moved away from the moving averages pretty substantially. This could still push a few more pips, I'm not saying, but eventually it will make that pullback back to the band here. So we can keep an eye on this pair as 4 minutes from now again. In the meantime, let me take a look at the dollar yen. The yens have made a lot of downside here in the Asian session. And I'm thinking that there could be perhaps a chance of catching a reversal in this case. Considering already the pretty substantial fall, probably a reversal makes more sense than trading with the trend for the moment, unless it retraces. All right, so reversals always require a bit of caution. So let's take a look at some time frames here. Okay, when looking at trend lines, we're kind of in a triangle. Well, we are in a triangle. So, I mean, if it would fall a bit more, it could be even more interesting, because then it would be bouncing off the bottom of this triangle, but that still requires 50 more pips. Not sure if it will get there, but right away. But anyhow, you can see the bottom of the triangle would be good. It's getting close to the bottom, but not there quite yet. We had a 100 pip drop here, 6 hours in a row. And if you look at the hourly moving averages, you see that they're intertwined. And when they're intertwined and you have the first breakout like this, then typically, as I said, price will go back to the moving average, the 21 band. So from that point of view, that would kind of support the idea that I have that there could be a reversal potential. I mean, I'm not talking about, when I say reversal, don't get me wrong, I'm not expecting this to fly up to 130. But I mean, just a simple move back to the 21 EMA at about 120 here, as you can see. All right, so just a simple move like that could occur. And then perhaps the trend will continue at 120 for more downside, right? Well, not the trend, but the momentum. Because we have downside here, it could be that small correction up to 120, and then this could still, again, be resistance to really move down to the bottom of that trend line. Everything moves in waves, as we know. So even if this is showing downside momentum and can eventually reach the bottom of the triangle, it doesn't mean that it will do that next hour or 2 hours. It could be 5 hours from now. And we'll have that small up and then down and then maybe up again. So depending on how aggressive you want to trade or how aggressive I want to trade and which trades I want to catch and how much time I have to monitor it. If I want to swing trade, if I want to intraday trade, I could focus on one or multiple of these kind of moves up or down. If I would be looking for swing trades, I probably wouldn't even trade this dollar yen because there's not a lot of space here. For intraday trades, probably the red arrow is the best. For scalping trades, any of these could be good, in fact, right? So depends. All right. So now let me take a look at the hour just closed. Let me just zoom in again to the 5-minute chart here. Got double divergence on the 1-minute chart. 5-minute chart is showing potential divergence. And this is the 4th candle here. 15-minute chart already has a bullish candle. So yeah, I think I will attempt a long here. 120 would give 32 pips potential. Ah, just moved up 4 pips. That's annoying. Sometimes it goes fast. And before I talk, it's already moved 5 pips, which is annoying. uh, let me see. Okay, I'll put a pending at now I don't want to, I would rather wait for the price that I had originally in mind, 60, 67 probably. Stop loss just below this bottom, 47 maybe. So it's about 1.5 to 1. Pound yen is also showing a reversal. Let me quickly take a look there. Okay, that seems like the momentum is a bit stronger there. So I think the dollar yen is a bit better. So it is a reversal trade. Therefore a bit risky, but it's pulling away. It's annoying. Should have right away taking that trade. Okay, I'll try the pull back and let's see if it works out. That's sometimes a bit difficult to multitask when having a webinar, especially on the lower time frames. Alright, looks like this one will kind of pull away, but oh well. As you can see, sometimes it happens right at the moment that you want to buy, and if you do, it just jumps in your way right away 10 pips, and if you don't, then you see it kind of depart from station, unfortunately. But I don't want to chase it now. I'd rather wait for a pending. Otherwise, it just eats too much real estate. If it's now only 20 pips left and the risk is already 30, that doesn't make sense. You see those 10 pips already change the whole R2R balance. Ah, that's great, Beverly. Well, I hope it's great. I think it will work out. There's a good chance, I think so. Should be fine. Only afterwards can we actually really say that was good, but at least, of course, you didn't miss it like I did. But I still have the pending. I think it's going to be tough, but you never know. The thing is that it could move up in one shot without giving the retrace. That can happen sometimes. Doesn't have to be though. I guess it's 50-50 now. I don't know. Yeah, I think it's going to be tough for me. Maybe I'll move it up to 70 at max. 119.70, still give me a 1-to-1, a bit more than 1-to-1 in fact. But 28 versus 23 instead of 30 versus 21. You see, that balance changes fast, right? 30 versus 21. And if I add 2 pips, look at that. What happens? 28. You know, you get 2 less, but you also add 2 risk. So it changes so fast, this balance. This is still 1.5 almost. And before you know it, this is already 1.2. But yeah, I'll try 119.70 then. Let's see. All right, pound yen is just a quick back to pound yen. One, two, three, four, 5 candle, bullish. Also looks actually ready for reversal, but no divergence, so the 5. Doesn't mean though it cannot make a retracement. Let's see. What I might do in this case, probably put a fib from here to here. Let's see. Engulfing twins here, 38.2 fib. I know it's a minute chart, but I was thinking about an entry at the 50 fib. Well, we're very close to this 21 EMA band on the 5-minute chart. Typically, I mean, even if it goes a bit up, there is a high chance, I think, that it will respect this band, still make one more dip. And from that point of view, I don't think it makes sense to. There is, even if taking a long now, it's still possible actually. But there is there is a decent chance that you'll get this first before doing that. So you have to live through that retracement. I might probably rather wait for the retracement. It keeps pushing. I'm not surprised, but now it's already pushing more and more. So now it's definitely too late for me. So I'll just move this fib along and probably put a pending order at this 50 fib. All right, but the target, let me think here. The target could be about 185, I guess it's a round number. 185, so that's still about 35 pips left. So if I enter at the 50 fib, which is now about 184.50, it's about 50 pips. The risk is below 184.22, which is about 30 pips, so about 50 to 30 at the moment. If it makes that pullback, that's something, you never know. Sometimes therefore market orders are a bit better, like I would have done with the dollar yen. The pound yen could have been a market order too, but I didn't see any divergence, so in that case I'm always a bit more cautious and perhaps like the pullback a bit more when there's that divergence, and also the 5 to 6 candle rule then helps. If there's not divergence, like the dollar yen, I would be more willing to take that market order, like I wanted to. But anyhow, let's see. There's a doji here. Hopefully, I'll make a few pips down. All right. I'll just keep an eye on the pound yen as it retraces higher. There is no guarantee it will make that pullback. There's definitely maybe 50-50 could continue. Well, not 50-50. Now it looks like actually it's going to continue. But when I was right in front of the wave here, right in front of the band, I would say probably 75% that there's a turnaround at the band. It's not at the top of the band. Moved up 25 pips in the meantime. Really goes fast, especially with the pound yen. Okay, so anyhow, let me, I'll put the pending order here at 185.02. Sorry, that's the wrong account. Let me actually go here. Okay, 185. O2. Targets. No, 184.52. Sorry, I'm getting it mixed up. 184.52. Target 184.98. That leaves 46 pips. Risk I'll put at 184.20. $19. All right, let's see. All right, other than that, let's take a look at maybe the pound. The euro yen, by the way, is also showing the same thing on the 5-minute chart, but it's just, it's all the same thing, in fact. But the euro yen also, just like the pound yen, made quite sturdy momentums here. Like the dollar yen is the only one that really has some weaker momentum. So the euro is also pushing quite fast down, the pound less so. So I think the euro yen is not much of a good reversal trade. It could reverse too and follow the dollar yen and pound yen, but it could be the one with the least enthusiasm here. So probably would skip that one. So anyhow, those were the yen pairs. Pound dollar. Let's see. In this uptrend channel, and making some kind of correction here perhaps. Broke out of that channel, hooked back to it, now using it as resistance, fell last hour, but is retracing up pretty fast again. And as long as it stays above this bottom, I think it's still consolidation. It could be easily still an uptrend. It's just correcting a bit deeper, that's all. Especially if it stays above the 50 fib. Now obviously it's not really moving up at the moment, it's just going sideways. Yesterday was a doji. Engulfing twins on the weekly. All right, so from that point of view, I think we'll get that upside. We'll probably break this top at the very minimum, and somewhere retrace this downside here. I think the resistance spot could somewhere be in this zone probably. Let's see if there's a fib. If we put the fib from top to bottom here. 61.8, 78.6 fib. All right, so I would expect price to break this top at 155-ish. I think it was, wasn't it? 154.75. And make one more push up. I mean, if I look at the weekly chart, that's what I would expect. But we got a big FOMC statement today. We have pound news, but from that point of view, I think there is that decent chance. So, what would merit a upside? Let's see. A break of this trend line, right? A break of this trend line would indicate this resistance trend line, and there would be that breakout potential up to the next targets here. So that's the upside. Downside, not too interesting at the moment because it's in a consolidation. This is going flat, relatively an uptrend. Therefore, shorts seem risky to me. Unless we break below this bottom, then things change, the dynamics change. But and in that case, if that happens, we had downtrend here. This could only be a retracement. It would continue, and this would only be a retracement. And then this breaks, we could see a follow through. Otherwise, it could still be this before we move down again. So this bottom very important. This zone very important for downside. Until that moment, until it breaks below or moves higher, upside looks a bit more attractive. But not right here either. So pound looks like it's more in a position of a waiting game at the moment, I would say. Now, until, of course, that doesn't mean that there's no trade at all in between the breakout here and the break here. Those are the trades with, let's say, more swing potential, perhaps. But until we break the resistance or break below the support, there could be bounce trades here, bounce back down, here, a bounce back up, or here, a bounce back up. Maybe smaller trades, intraday trades. Those are possible, but we're not there either at the top or at the bottom at the moment. So pound would need to move up a bit more. Let's see how many pips. $154.50 is a round number close by. This is 154.67, so somewhere 154.50, 154.75-ish, if we get there. Now it's 32, so it needs a bit more push up before it reaches a resistance spot that could be interesting. So unfortunately, should have taken the market order, as you can see. Now I'm going to miss that trade. That's a pity. But okay, I just because of the divergence, I wanted that pullback, but I'm not going to get it. It's already at 93, so that's going to be tough luck for me. What can you do? Let's see. Oh well, I have to move on. Let's see. Dollar is not giving the pullback either. It's still at the band though, but there's still a chance. That's always an annoying kind of choice. Like, do I wait for the pullback? Do I take the market order? Kind of one of the things I always find annoying. because I like the fact that I can have a pending order there, but with these reversal trades on a 5-minute chart, sometimes you just totally miss the trade like that. So more and more, like on a 5-minute chart, I lean towards market orders just to be able to get in. But yeah, with no divergence, I thought it was a bit. I still prefer if there was some divergence to give us that extra boost. Oh well, would have been a good 50 pips. But so I'll delete it. It's already at 95. So let me go ahead and get rid of that. All right. Let's take a look at something else, like the Aussie. Let's see. I got a question. Yeah, please. Actually, it would be easier for me if you send me an email. With doesn't have to be long. Just hi, I'm from the webinar. Can you send me the moving average indicator? That'll be easier for me. There's my email. Okay. So Aussie got to the minus 61.8 target. That was the turnaround spot I was looking for. Kind of nicely respected this trend line as well, but the target I think is the main thing here. Let's take a look at the 4-hour chart quickly as well. Definitely had a resistance potential. 21 band is here. The 4-hour long-term moving averages. But we're also at the 50-minute moving averages. Looks to be a bit of a bag of a mixture of things going on here. Yeah, the bounce off the fib was good, but now, let's see. Personally, I think now I would probably prefer to put a fib on this downside. You see, the thing is that this was a good bounce, but it doesn't mean it has to continue down like this forever. Although the pound yen would almost show the difference, the possibility of it indeed continuing longer than we think. But anyhow, this Aussie doesn't have to do that. The Aussie has gone below the 21 band. 21 band is above the long term. So there's a good chance of a bounce. And this could be resistance spots. Maybe get a kind of a head and shoulder like this. So I would look for resistance and weakness on the right side there and see if we can get a turnaround. The alternative could be to wait for the turnaround to happen, let it move down, and then break below again the 21 band and try to short it somewhere in here for a move down to the long-term moving average and try to get this zone right in here. I think those would be attempts that are worth trying to get that short. The upside, I wouldn't probably be looking for upside at the moment. It seems too much near resistance in my opinion. Doesn't seem appealing to me. Dollar CAD is going sideways. That's not interesting. Kiwi looks like it's making a bear flag, but it is a bit awkward how it really is created with this gap, apparently. Still, it is a correction channel, and if it breaks, it could be a breakout to the downside. Let me put on the moving averages. If it breaks, though, you can see, all right, that's why the moving averages are a good supportive tool when using trend lines. Excuse me, because of the fact that if you have a trend line, the best breaks occur when the moving averages are still separated from each other. But once the moving averages are hitting each other, then the trend line break is more dangerous. Because if it breaks this trend line, it could continue for a bit, but it'll probably snap back to the moving averages before continuing. Whereas if they're not touching, the breakout has a higher chance of continuing without making a very big snapback. That's my rule of thumb, at least. I'm not saying it's always like that, but for me, it's a very useful guideline to understand when trend line breaks have a bit more potential. So this trend line is nothing wrong with the trend line, but the break, I have already been more hesitation with taking the break there immediately, and I'd rather probably wait for the pullback. So now you can see how you can make a distinction. Whereas this one, if it would have broken that spot, just to give you an example, the immediate breakout could have been, or the happy trigger, as Ned says, right? Would have more merit, at least, in my opinion. Now, regarding the pound yen, you can see that it's very important also that if it really gets close to your target, that I choose a market exit sometimes, because if it goes up to 97 and your target is at 98 and you're getting a 30 pip drawdown here relative to a 50 target, if I would have taken the market order here at 50-ish, 54-ish maybe, so say 45 pip target, then that's a lot. Even if it does move up here, I'd rather not. Typically, I would look like this and see what's going on even on a very low time frame, just not to give up all those, live through such a big retracement if it gets very close within 5 pips of my target. All right. Let's see if I got taken in. Looks like I'm using a different account here for this trade, and looks like it just missed me. Alrighty, euro odd. Still in this mess, in fact. This triangle. If it does break the resistance trend line, it would be still a good breakout, I think. Because look, the moving averages are not aligned. It would be a 4-hour breakout, but 1 hour you can see it is a mess. So the 1 hour chart would probably see something like this happen if it does break. Oh, hang on. Looks like I just deleted the euro odd there by accident. Okay. There it is. So this looks like a very big structure here at the moment, which means that there's perhaps some range trades that could be traded. Let's see. Recently, we just had a bounce again here. Back to the long-term moving average. Well, it no, it seems to be in the middle of nothing at the moment, I would say. All right, pound New Zealand. Kind of like a slight angled up channel here. Talked about, I think last week the fib was on this swing high, swing low, if I remember correctly. Back to the 50 fib. I didn't trade this one, so I don't remember exactly, but here's a long-term moving average and the 50 fib. Yeah, it seems to bounce there. Thought we discussed that last week, and if it does break above this top and this trend line, it could break out to these targets. And on a 1 hour chart, probably this trend line. So that could be an interesting one to keep an eye on the Euro New Zealand to the upside. Pound New Zealand, oh no, that was the Pound New Zealand I was talking about. It didn't go to the 50 fib, sorry, got them mixed up. Went actually all the way to the 78.6 fib. This went a lot deeper. It went all the way to the long-term moving average as well, and a deeper fib before bouncing up. Hmm. All these New Zealand's, Euro odds, Pound New Zealand's, they pretty similar. I'm not sure if I would like to. I mean, there is that breakout here on the Euro New Zealand potential, like the Pound New Zealand. But I'm not sure if it's really a good week for swing trades to, I mean, maybe one opening today, one and still closing it tomorrow is okay, but obviously Thursday is no for that. So it's not a great swing trade week. I think it's better for more intraday trades probably, and then to trade intraday on pound odd, I think, or New Zealand, pound New Zealand, it doesn't seem to be in a very good position at the moment. So I would probably not trade these. Alrighty. Anything else that you maybe want to take a look at? Maybe more for today? Anything in mind? Any pair in mind that you would think that we didn't look at yet, or any exotics maybe? We could take a look at DAX perhaps as well. Euro pound, yeah, we can do that. Anything else? Typically, intraday I trade the majors, and swings. If I see a nice swing, I would trade on crosses, major exotics, let's say, maybe like a pound CAD. But in a week like this week, I think probably trading majors on Tuesday, Wednesday makes sense, and then Thursday I would be very careful. Probably not, maybe the Asian session, but otherwise probably not traded until after the news event, if at all. I will see. All right, Euro pound. Making a very big bear flag. bear flag, sorry, bull flag. Not a bear flag, obviously, sorry. Getting my animals mixed up here. 38.2 fib, typical for a bull flag, isn't it? Good momentum to the upside. Interesting, good momentum here. I mean, it doesn't have to be a continuation, but at the moment, it does look like that. Interesting. If it does break this trend line, it could make a dash up to the 272 target, perhaps. Let's take a look at the moving averages. On the 4-hour chart, no, they're still separated. They're not into the 20 just yet. So that would be, I think, an interesting breakout. Now, as you can see, price went back below, and then again below, and then eventually went to the long-term moving average. So I think that the breakout has nothing holding it back. It has already retraced enough. It would really have to break below this bottom, I think, for me to see it differently than bullish. So I wouldn't want to short it here. That space there has been already filled up here. So I would not trade it short really until it breaks through the moving average, through the short. I wouldn't jump in the short right away, but that's when I think that there is a bearish environment that is suitable for perhaps looking for shorts. But I wouldn't want to. Why I wouldn't want to trade it? Because the target of if it breaks below the 21 band is the long-term moving average, and it already reached the long-term moving average. So the target has been taken out. Doesn't mean though that it couldn't go there again, i.e. Then in that case it would be probably reversing, but considering the whole consolidation, I was thinking more that I would rather see a bigger confirmation instead. I mean, I guess it's still possible to short here and take a bounce here or a breakout here. But perhaps these, the areas with the blue circle seem more interesting to me. Let's take a look at lower time frames, 50-minute chart. One-hour chart has reached the long-term moving average here. So it would have to break below for a potential short. It would have to 4-hour chart would probably have to 4-hour candle would have to close probably below the 21 band, which means that the hourly chart would have to break below the long-term moving average. Then there is that potential for this. Yeah, I think that's it from my side. Any questions, BT, perhaps on how you want to add something maybe? If you're thinking of shorting, this still looks corrective. It looks like in a way a bull flag. Got momentum here. Stopped at the 38.2 fib. It could work, but I see too many, let's say, at least contradictory evidence that a short here is mm, has some struggles, could have some struggles here. I think too many obstacles for me to take that trade to the downside, if you see my point. Might work out. I mean, I don't want to discourage you that the trade goes your way and you think, oh boy, I wish I would have taken the trade. But if I look at all these things and add them up, then I think that it seems too risky to short right at the bouncing spot here of a 38.2 fib. If I look at the moving averages as well on a 50-minute chart, they seem to be intertwined. And I think that if I were to be looking for a short, I'd rather probably wait for the break, and we'll probably get the pullback. You never know. As I was just showing with the pound yen, sometimes my pullback plans don't work out. That's definitely can happen. But considering my rule of thumb, at least, is the fact that if they're intertwined, we should get moved back to the moving averages. That pound yen was a bit different trade because it was a reversal trade, and it's moving back to the moving average. All right, so it's a bit different. But anyhow, so they're intertwined, and we'd rather wait for the break and pull back, and then if it breaks below the 38.2 fib, maybe look for the short here for continuation. We're going to find out. This is the fifth candle. So if this bottom doesn't break in this candle or the next, then it probably will not break this bottom and there could be a bounce. If it does, then it could be good to let it break, let it pull back, and then take the short. So let's see, we can keep an eye on this. It'll be interesting to see how price handles itself here in the next 10 minutes. The DAX. Let's take a quick look here. Sorry, I'm just getting my bearings here. It actually filled the gap because I don't look at the DAX very regularly, but it filled the gap and it didn't bounce at all, didn't it? It looked bullish, that break. Very awkward how it just totally went flat and didn't make a rebound. Very interesting. Totally didn't expect that. I saw it more bullish, but just retraced and kind of went flat after that. Strange. Anyhow, we have this trend line here. If it breaks below that, it could be a good breakout. We got the moving averages torn apart, so yeah, that could be a breakout to retest support. And if it breaks, perhaps if it breaks above this band, it could be, it could finish that move up to the long-term moving average, the one that I thought would happen last week, but it didn't. But obviously also the DAX and all indices will be dependent on that rate hike as well or not Thursday. Maybe even last week was impacted by it. Who knows? I mean, typically I only look 1 week ahead, but who knows? I mean, the market, maybe it was Thursday already. I mean, it sees the FOMC a week ahead of time and thinks, okay, I'm not, I'm going to wait it out till that news event is there. Maybe it's such a big moment, isn't it? This is maybe not even a normal FOMC. I mean, this is the FOMC, of course, that the market has been waiting for very long. First it was June, but already, I would say half a year ago, the most likely date was already pushed to September. Now the moment is here. It's already a week ahead, quite close. So maybe that's why, I don't know, who knows? But it didn't move up. Probably will not move up this week either, considering Thursday. And that is a big event. Beverly took it and it didn't work out. That's a pity indeed. Yeah, those things fortunately sometimes happen. So I would be probably even cautious of the break to the downside, really, with that event in mind. Alrighty. Let's see. Pound CAD, New Zealand yen. We can take a look at that. If they raise the rates, the typical correlation, textbook correlation, should be that stocks go down because the the rate that you can get from the U.S. Government bonds there is more interest rate. I mean, so it's more attractive to do that than maybe the riskier, right, the riskier stock market. So the stocks will be a bit less interesting. So that should be let's say, the textbook correlation there. Of course, historically, a quarter percent certainly still very low, and it would still stay very low. Historically, it's even if it's 0.5, it's at a really at all-time lows. But relatively, compared to the last 9 years, obviously a quarter is substantial. So it depends how you look at it. All right, I just got in the dollar yen. Let me just take a look if I really want to even stay in. Actually, yeah, I think yes. It's moving down fast, but what can you do? I'm still think that the environment is okay for a correction like this. So I'm willing to take that trade. It could be a loss considering how fast it's moving down now. But yeah, it's one I would be willing to take. Now, if you're looking at this and you're not into trading, you're thinking about it, could be good to look at even the 1 minute chart to see is there some reaction to 78.6 fib, for instance, maybe. It's not something I do often, but sometimes. But I think considering the divergence, there's a decent chance of something like this happening here, like an ABC correction, 1, 2, 3. So I'll be willing to take that risk at this spot. So I'll leave that on. Let's see if that works out. Alrighty. Pound dollar is pushing up and is getting closer to that resistance zone, by the way. The euro yen could be moving a bit faster now. Not much, but the euro dollar is pulling up faster. It's making that move back to moving averages. As we said, the 50-minute chart is flat moving average, so the moving averages are going to be like quicksand here. It's going to gravitate back to them, and indeed, that's what's happening. So the euro yen could be an option too. It's probably the same like the dollar yen at the moment. But well, the dollar yen has the divergence, so there is that difference, right? Basically, could make that rally, ABC rally too. Like actually the pound yen did, it made a rally. Well, actually it didn't make an ABC, it just went up. But the pound yen already went up to target. The euro yen and dollar yen could do that. So I think that I would be still comfortable with this trade, even though it hit the 78.6 pips. Sometimes it does that. So let's see. I will stay with that. All right, back to the pound CAD. That looks like a good trend line. That looks like a good trend line. So let's test these trend lines. How strong are they? And the bullish break would be good. Probably above this resistance here. And a downside break, I would not be that interested in unless it breaks this bottom, probably. Yeah, probably would not trade here any swing trades either. But these support and resistance could be interesting. Let's take a look at this. Let's see, this looks bearish. We're actually getting a break of this trend line. And we'll probably get a pullback. The 1 hour moving averages are still intertwined, and the 4 hour not. So it looks like, it looks like we'll have a potential here for a good breakout. It's just that we'll probably see a pullback before continuing. When looking at the 1 hour chart. So it's basically the same like the euro yen and dollar yen. I would hope, at least. I don't know. That's what at least I'm trading on, the dollar yen. Well, if it doesn't work out, then what can you do? That's part of life, and that's why it's always good to stay flexible, and even if one trade doesn't work out at the beginning of the day, that you don't risk too much on it, so that you can still keep trading a second and third time, so you can rebound out of a small drawdown at the beginning of the day, obviously, so that you have the ability to take another trade and a third trade, and probably even a fourth trade. So taking smaller units of risk is good, so that you stay flexible and you can handle more of a drawdown. But yeah, the same thing as with the dollar yen, would expect a bit of a pullback here, kind of same motion up to that trend line, after which resistance probably will kick in from here. So that's what I would be looking for the New Zealand yen. Pretty similar to the other yens, I guess. With the difference that the New Zealand yen here would be a big trendline break. So the dollar yen, it almost looks like it's impossible now for a rebound. I mean, I've seen it happen. At this point, when it's going against you like this, it's very easy to say to yourself emotionally, like, oh, it's never going to happen. I might as well maybe, for instance, save a few pips. For instance, that's always difficult, maybe from a psychology point of view. But it's, that's just part of trading. I just accept the fact that I've probably will either lose those pips or win those pips. I'm not going to do anything now about it unless really price makes a bounce and it shows struggle here somewhere. Then I would consider exiting the trade at a small profit if it takes too long. Too long, what is too long? What? It's a bit difficult to, I don't really have any definition for that at the moment. Perhaps, let's see. What could be too long? Well, if the sixth 15-minute candle, this is the second, the sixth one doesn't break this top, that could be too long. So maybe another hour max. Now it pushed through the 78.6 fibs, so it's going to be a tough one, this one. All right. Let me, in the meantime, show you the webinars for this week. Tomorrow we're going to talk about strategy in the morning, same time, same place. We can see how these trades, the pound yen worked out, but how the dollar yen works out, and what else? Actually, let me make a recap maybe first of all. There could be the potential here to make a fall down to the long-term moving average, or if it breaks above here, to break out. I'm not really jumping for joy to trade right now. I'll keep an eye on it though. Pound dollar, maybe the breakout here would be good, right? Or a bounce at this trend line too. For a small bounce, I'm talking about small bounces back to the middle, roughly. Or the breakout to the upside, it could be interesting. AUD maybe it finds resistance here for downside. And that was it, I think. Not really a lot going on. Euro pound, let's see. 1, 2, 3, 4, 5. Sixth candle didn't break, as you can see. All right, that's the sixth candle. And then the seventh was already bullish. So that shows that there's probably that this bottom is the bottom, and we're going to make a bigger correction like that. Not that I'm trading, I'm just curious. Not a lot of things on my list maybe, but it seems like the majors are the things that I'm going to keep an eye on today. Tomorrow, strategy. Nana is going to take a look at trend lines as well on Wednesday evening. And Thursday, we're going to take a look at tackling drawdowns and risk. So I hope to see you in these webinars. Thanks for joining, as always. And wish you happy trading. Hope that you can catch many pips. But above all, be careful with the risk. And we'll see you soon, okay? Cheers.